Good morning. It's 11:05 a.m. Do you know where your home equity is? Welcome to the Velocity of Money. Here now to answer your questions about real estate, capital, equity, funding, and finance, your host of the Velocity of Money, Michael J. Barnes.
Welcome back to the Velocity of Money. This is Michael J. Barnes, and you are listening to KFNX 1100, Arizona's news talk leader. And don't forget, always, you can listen online at 1100kfnx.com. Back in the studio with us, once again, Brett Fallon, one of our very favorites. Brett, thanks for being here.
I'm happy to do it.
And we've also got Dan Havey, the author of Real Estate's Future, with us today.
You're welcome, sir.
And I want to take a few minutes in this segment here before we get into Bill O'Reilly, and I want to talk about the opportunities for refinances. Now, I'm not going to get specifics into interest rates because if I do that, then I have to do specific disclosures. The rules and laws governing the mortgage industry are very specific and strict. So we do not want to give any specific information in regard to rates. I can tell you we can talk generalities about what's happening, but interest rates are as low as they have been in my entire career.
Yeah, Michael, I was just curious. Back when I got into the industry many, many years ago, there used to be a rule of thumb that if you were going to refinance, you had to lower your interest rate by at least 2%. And I know as time went along and products changed, that really became unnecessary. But I'm just curious, in today's market is a lot different mortgage market than we were dealing with even 2 years ago. Is that still true? There's a 2% rule, or what's going on now?
You are correct. Things are significantly different.
Just to chime in here quickly before you answer the question, I happened to catch Susie Orman on television.
Hey, is she still wearing those earrings?
I think she's still wearing the exact same earrings. And as she was talking about mortgages, there was a caller, I believe, that called into the program, and the question became similar to what Dan just asked you. Basically, her comment was this: if you're at a 6% interest rate on your mortgage or above, now is the time to refi. That's what she said as a blanket recommendation. And I know there are people out there that put a lot of credence into what Mrs. Orman has to say, Miss Orman has to say. But, maybe you could speak to that a little bit. You just mentioned that these are the lowest rates in your career, and you've been doing this for a while.
I have, and they are. There was a lot of speak last couple of weeks.
The Fed funds rate, by the way, is the lowest in the United States history as of this week.
Also, and the discount rate as well. I mean, it's to the point now where banks are lending money to each other and nothing. They're giving it to
the
each
Fed
other.
funds rate right now for intrabank lending is 0. The problem is banks still aren't lending money. They're still scared of it.
Well, actually, I'm holding out because I think they're going to pay me to borrow money soon.
Oh, I like that. That's a good plan.
Okay, but though, to be serious about this, the refinance thing, because it's a very serious topic. And people are getting, I think people are starting to see their mailboxes lots of advertising crap about refinance, do this, do that, and everything else. I believe that doing a refinance is no different than doing a loan modification or buying a house. You need to sit down with a human being that's local, that you can know is a legitimate source. I mean, you're going to give all this personal, private, proprietary information about you, your family, your kids, everybody's social security numbers. You want to make sure that you got somebody there that you know who it is. In regard to the old rule of thumb of 2%, nothing could be further from the truth. And I'll expand, but to the point of Ms. Orman saying that if you're 6 or higher, you need to consider it, that is a blanket statement, and blanket statements never work. Excuse me. We just did a refinance for a guy that was at 5.5%, and it made sense. Every situation is different. As far as what if my interest rate, or how much do I need to lower my interest rate to make it work? Well, it depends on what kind of a mortgage you get. First of all, the only kind of loan you get today, in December of 2008, is a 30-year fixed.
I know that one of the things that was really interesting to me, you and I have referred clients to one another for a number of years, so we share a number of clients. We're familiar with those families and those households. And Monday, this is Wednesday, Monday and Tuesday of this week, I had about 7 phone calls from clients that you've already done loans for, refinance is for, asking if this is a time to refinance a loan that is only a year, maybe 2 years old. And then I know several of those cases, the answer was yes. You're
Right.
actually helping those families right now with that process.
I am, and we do. To answer the question, you need to determine what the payback term is. In other words, when a refinance is done, it's a new loan. There is new title insurance. There's appraisals. Lots of different things may need to be done. Not in every case, but in most cases, there are costs associated with doing that. The cost has to be offset by the amount of savings.
It's a break-even analysis.
Absolutely it is. The shorter the break even, the better the loan. We just did one, working on a case right now that's going to be done here in the next couple of days, where we lowered the guy's interest rate by 1/8%. It absolutely made sense for him. So it's not for everybody, 2% or lower.